Right now, behind closed doors at the Securities and Exchange Commission, a document exists that will permanently alter the global economy. It is an S-1 filing, the ticker symbol SPCX. For 2 decades, the world's most dominant aerospace company was a walled garden, accessible only to billionaires, venture funds, and sovereign wealth states. But Elon Musk just pulled the trigger on what is officially tracking to be the largest initial public offering in human history. But here is the terrifying paradox that Wall Street isn't telling you. SpaceX just reported a staggering $18.7 billion in revenue for 2025. They control 90% of the world's commercial space launches. So, why now? Why would Elon Musk, a man who famously said he wouldn't take SpaceX public until Starship was regularly flying to Mars, suddenly hand control of his life's work to the volatile, ruthless demands of public shareholders? There is a hidden, massive financial crisis, or a brilliant trap, hidden deep within page 42 of their S-1 filing. And today on Tech X24 Live, we are breaking it wide open. If you stay with us here on Tech X24 Live until the final minute of this video, you are going to get an unfair advantage. We are going to deconstruct the exact mechanics of the SPCX valuation, break down the top secret 2025 revenue streams line by line, and reveal the precise date analysts expect the stock to go live. By the end of this deep dive, you will know exactly how to evaluate this IPO, whether it's a generational wealth builder like buying Apple in 1997 or a hyper-hyped bubble. However, if you skip even a single chapter of this video, you will completely miss the core structural risk. There is a specific clause regarding the Starlink spin-off valuation that could leave retail investors holding empty bags while institutional insiders dump their shares. If you invest blindly based on headlines without understanding the 3 red flags we are covering in Part 4, you are exposing your capital to unprecedented volatility. This is not a video about hype. This is a cold, hard, fact-driven look at the reality of the cosmos meeting the reality of capitalism. Let's look at the numbers. To understand the IPO, we must first look at the sheer scale of the monster SpaceX became in 2025. $18.7 billion in a single year. To put that into perspective, that is larger than the GDP of dozens of countries, and it represents a massive 40% leap from their 2024 metrics. But where is this money actually coming from? Let's look at the first slice of the pie. Commercial launch services. For years, the Falcon 9 has been the undisputed workhorse of the space age. In 2025, SpaceX achieved a mind-bending launch cadence, averaging 1 launch every 48 hours. They have commoditized space. Because their boosters are reusable, their profit margins on launches have skyrocketed to an estimated 60%. No other country, let alone company, can compete with this. But Falcon 9 is just the baseline. The real cash cow, the crown jewel driving this entire IPO, is Starlink. According to the S-1 filing, Starlink now boasts over 7 million active subscribers globally, including massive enterprise contracts with cruise lines, commercial airlines, and the U.S. military via their Starship initiative. Starlink alone accounted for nearly $11 billion of that $18.7 billion revenue. But here is where the plot thickens. If Starlink is printing money, why do they need public cash? The answer lies in a project that is currently burning through capital at an alarming rate. A project that Wall Street banks are calling the infinite risk vortex. Enter Starship, the largest flying machine ever built by humanity. It is designed to be fully and rapidly reusable, capable of carrying 100 tons to orbit. If Starship becomes fully operational, it drops the cost of launching payloads to space by a factor of 10. It completely breaks the global aerospace market. But building the future is terrifyingly expensive. The S-1 filing reveals that in 2024 and 2025, SpaceX poured an estimated $4.5 billion annually into Starship development, infrastructure, and structural losses from test failures. Elon Musk's private wealth and SpaceX's internal cash flow from Falcon 9 are no longer enough to fund the scale of what comes next. Think about it. To build a city on Mars, or even to fulfill NASA's Artemis contracts to land astronauts on the moon, SpaceX needs to build a fleet of hundreds of Starships, massive orbital propellant depots, and revolutionary launch towers. The private venture capital markets are drying up. High interest rates have made mega rounds of private funding incredibly difficult to secure. SpaceX has realized that to fund a multiplanetary future, they need access to the deepest pools of liquidity on Earth, the public stock market. But this opens up a massive ethical and structural dilemma. Public markets demand predictable quarter-over-quarter earnings growth. They want to see profits now. Elon Musk wants to build a colony on a dead planet millions of miles away, a project with a return on investment timeline of roughly 50 years. How do you reconcile a CEO who looks centuries into the future with a Wall Street hedge fund manager who only cares about the next 90 days? If you think Elon Musk is giving up control of SpaceX just because he's filing for an IPO, you don't know Elon Musk. Let's dive into the legal architecture of the SPCX filing. This is the structural reality that every investor must understand, and it's something you'll want to rewatch this section to fully grasp before putting a single dollar down. SpaceX is utilizing a dual-class share structure. They are creating Class A shares, which is what you and I will be able to buy under the ticker SPCX, and Class B shares, which will be held exclusively by Elon Musk and early insiders. Here is the kicker. Each Class B share holds 10 times the voting power of a Class A share. According to the math hidden in the prospectus, even if public investors buy 70% of the equity in SpaceX, Elon Musk will retain over 75% of the total voting control. What does this mean for you? It means when you buy SPCX, you are not buying a voice in the company. You are buying a ticket to a ride directed entirely by Elon Musk. If he decides to divert billions of dollars from Starlink profits to fund a high-risk nonprofit Mars terraforming project, public shareholders cannot vote him out. The board cannot fire him. But the S1 reveals an even more shocking strategy, a strategic maneuver regarding Starlink that could happen within 24 months of the IPO. For years, Wall Street predicted that Elon Musk would spin off Starlink first as its own separate IPO because it has predictable consumer subscription revenue that public markets love. Instead, he chose to take the entire corporate entity public under SPCX. Why? Because the S1 outlines an incredible dual-phase rollout. Phase 1. Use the immense hype of the SpaceX brand to pull off the biggest IPO in history, raising an estimated $30 billion to $40 billion in direct public capital. This immediately synthesizes the cash needed to finalize Starship and secure the military Starshield infrastructure. Phase 2. The prospectus explicitly leaves the door open for a future tax-free spin-off of Starlink to SPCX shareholders. This is the golden nugget of the entire filing. If you hold SPCX shares and a Starlink spinoff occurs, you could receive direct proportional shares of the new Starlink corporate entity. Starlink would become a dividend-paying, hyper-stable utility stock, while SpaceX Core remains a hyper-growth, high-risk, deep-tech aerospace stock. But don't celebrate just yet, because page 74 outlines the liabilities. SpaceX is deeply tied to government regulations. If a single Starship has a catastrophic failure over a populated area, the FAA has the power to ground the entire fleet for months. For a public company, a 6-month grounding means the stock price could crater by 40% in a single day. When you invest in a normal company, you face market risk. When you invest in SPCX, you face literal rocket science risk. Let's talk about the actual valuation. Whispers out of institutional investment banks suggest that SpaceX is targeting an IPO valuation between $250 billion and $300 billion. Is that insane? Or is it a discount? Let's look at the facts. Legacy defense contractors like Boeing and Lockheed Martin trade at roughly 1.5 to 2 times their annual revenue. If SpaceX traded like a traditional aerospace company, it would be valued at around $40 billion. But SpaceX isn't an aerospace company. It's a monopoly, operating a proprietary planetary internet grid with a constellation infrastructure that no one else can replicate for the next decade. Wall Street is valuing SPCX like a hyperscale tech giant, similar to NVIDIA or Microsoft. If Starlink expands its subscriber base to 20 million users by 2030 and Starship successfully lowers orbital delivery costs to $10 per kilogram, a $300 billion valuation, today might actually look incredibly cheap 5 years from now. But here is the immediate threat to retail investors. When an IPO of this magnitude drops, Institutional banks buy up the initial shares at the set offering price. By the time the ticker SPCX opens on your brokerage app, the price will likely have been pumped by 30 to 50% due to sheer public frenzy. If you buy at the absolute peak of day one, history shows you could face a painful correction before seeing any green. The SpaceX S1 filing for the SPCX IPO isn't just financial news. It is a defining moment for modern civilization. For the first time, everyday investors can own a literal piece of humanity's journey to the stars. But remember what we uncovered today here on Tech X24 Live. You are buying into a company where you have zero voting rights, where your capital will fund a multi-billion-dollar, capital-intensive Mars dream, and where the stock price will be as volatile as a rocket launch. If you want stability, stay away. But if you believe that the future of the global economy is orbital, digital, and multiplanetary, SPCX is an asset that simply cannot be ignored. The expected IPO roadshow is rumored to begin next quarter. We will be tracking every single amendment to this S1 filing as it drops. Bookmark this video so you can come back and re-examine the financial breakdowns we showed in Chapter 3 and leave a comment below. Are you buying SPCX on day one, or are you watching this launch from the sidelines? Don't forget to subscribe to Tech X24 Live to stay ahead of the markets and the future of tech. We will see you on the next deep dive.